Heya Cryptozens. Tonight's show. FTX wins Voyager at auction. Wintermute, was that an insider's job? And Powell on DeFi and CBDCs. It's 10 p.m. Pacific time. The date is September 27th, 2022. Welcome back to the Crypto Overnighter. My name is Nicodemus, and I'll be your host. The cover model, mascot, and co-host for this podcast is Tex. And together, we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. If you have questions or comments on this show, come find us on Twitter or email us at nick@cryptoovernighter.com. And keep in mind, nothing in this show should ever be considered financial advice. Voyager Digital made a mess, and now we found out who is going to pick up the pieces. When it came down to it, there were three competitors. Three exchanges placed bids to pick up Voyager Digital's assets. Those exchanges were Binance, Crosstower, and FTX. So it looks like FTX and Binance were each proposing that current Voyager customers would get a rated share of their digital assets. And then those customers and their assets would transition over to the relevant platform, either Binance or FTX. Crosstower was taking a different approach. Their proposal saw the survival of the Voyager app and platform. Like the plans submitted by FTX and Binance, customers would receive a prorated share of their assets, and also Crosstower would share revenue with Voyager customers for a few years to come. And the way it worked out, FTX US submitted the winning bid. It still has to be approved by the US bankruptcy court. It needs a Chapter 11 plan and an asset purchase agreement. The winning bid was valued at $1.4 billion. Voyager announced this, tweeting out, quote, "Today, after a competitive auction aimed at returning maximum value to customers, FTX US was selected as the highest and best bidder. Price release linked below. More information about what this agreement means for customers to follow." And in an announcement, Voyager revealed that the winning bid was made up of the estimation of the future value of crypto they're holding. That works out to $1.3 billion. In addition to that, FTX threw in another $111 million of what they're calling incremental value. I have no idea what they mean by that. Now, for current Voyager customers waiting for access to your crypto, there's not a lot of information out there. Voyager said something about information on restored access to people's crypto, quote, "will be shared as it becomes available." And they did say that FTX US platform will, quote, "enable customers to trade and store cryptocurrency after the conclusion of the company's Chapter 11 cases." Now, as a reminder, Chapter 11 bankruptcy is sometimes called a reorg or a reorganization bankruptcy. It's designed to let businesses continue to earn and continue to custody and continue to control their own assets while they plan to either reorganize or sell the company off. And in this case, Voyager insists that their Chapter 11 was, quote, "aimed at returning maximum value to customers." They said that the sale to FTX was the best alternative, which is interesting that we landed here because Voyager rejected FTX once already. Back on July 22nd, FTX made an offer to Voyager, and in that offer, customers would have gotten immediate relief. They would have also gotten the option to join FTX. So FTX would have paid out customer crypto claims. They'd be paid in US dollars based on prices from July 5th, 2022. And because those claims would be paid in US dollars, that would potentially make customers responsible for a tax bill. 2 days later, Voyager rejected FTX's offer harshly. Quote, "Voyager will entertain any serious proposal made pursuant to the bidding procedures described in its motion. It seems clear, however, that Alameda FTX's proposal, which was made in contravention of the proposed bidding procedures, was designed to generate publicity for itself rather than value for Voyager's customers." They called it a lowball bid dressed up as a white knight rescue. They described the deal as, quote, "a liquidation of cryptocurrency on a basis that advantages Alameda FTX." I'd be really interested to see what's different now. Did FTX end up paying more than they offered before, or did they get a better deal? Sam Bankman-Fried said they pretty much wrote off the money that they loaned to Voyager. Was canceling that debt part of the proposal? In their announcement, Voyager said, quote, Voyager received multiple bids contemplating sale and reorganization alternatives, held an auction, and, based on the auction's results, has determined that the sale transaction with FTX is the best alternative for Voyager stakeholders. Now, this whole process has been ongoing for a while now. The deadline for submitting offers was extended from August 26th to September 6th. And then, on September 7th, they announced that they were extending the deadline yet again. They said, quote, Voyagers, we want to let you know that multiple bids were submitted as part of the company's restructuring process. As a result, an auction is scheduled for September 13th. So, now today, we have seen the results of this auction. Voyager said, quote, the results of the auction do not change the bar date nor the need for customers to determine whether to file a claim. Voyager also said that customers should still file to reclaim their crypto before October 3rd. Now, this deal doesn't include Voyager's claims against Three Arrows Capital. Voyager owned 3AC a bunch of money, and now Voyager still retains rights to that debt. And if they recover any funds from that debt, it'll be distributed amongst the creditors. I wouldn't hold my breath. Voyager is listed as one of the unsecured debtors. So as we like to do on this show, let's take a look at the numbers. Voyager's token, VGX, got a brief rally. It hit the 75-cent mark. As I look at it right now, it's 67 cents each. It's down 77% year to date. That said, it has gone up 28% in the last month. At the time of writing, the global crypto market cap is $933 billion. That's down 0.33%. The top 5 cryptos by market cap are Bitcoin down 0.35%, Ethereum down 0.31%, Tether, USDC, and Binance Coin down 1.16%. Wintermute is a leading crypto market maker. Last week, they were hacked. The thieves got away with $160 million in DAI, USDC, Tether, Wrapped ETH, and other assets. This all went to an address that has since been flagged as Wintermute Exploiter. On September 20th, the hacker exploited a flaw in one of Wintermute's smart contracts. And so far, we do know that Wintermute offered a 10% bounty to the hacker. Return the funds, and they'll look at it as a white hat event. Enter James Edwards, aka LibraHash. He is the editor of Zero Nonsense, and he contends that a hacker couldn't have just been some rando that, quote, simply recovered the private key to an unsafe externally owned address that the team failed to revoke admin permissions for. He published his analysis of the hack on Medium. It's his view that the hack must have been an inside job. That comes from his analysis of how the smart contracts were interacted with and exploited. Quote, in other words, the relevant transactions initiated by the EOA make it clear that the hacker was likely an internal member of the Wintermute team. He says that the lack of uploaded verified code for the smart contract makes it impossible to know whether this was an inside job or not. Typically, anytime you put up a smart contract that's responsible for managing user funds, that smart contract is put up for public scrutiny. Quote, this in itself is an issue in terms of transparency on behalf of the project. One would expect any smart contract responsible for the management of user/customer funds that's been deployed on a blockchain to be publicly verified to allow the general public an opportunity to examine and audit the unflattened Solidity code. So Edwards said that he decompiled this code, and he said that the code didn't match with what was supposedly compromised. He said that the CEO's explanation was, quote, rushed, hasty, and sloppily published. Now, this analysis by Edwards represents his first foray onto Medium. So far, Wintermute hasn't responded. In fact, nobody has corroborated his findings. So that said, people were talking about this soon after it happened. It's been pointed out that the vulnerability comes from a vanity wallet generated by the profanity tool. That vulnerability was disclosed publicly days before the hack actually happened. So nobody closed the door on that potential entry point. If it's not an inside job, it sure looks like one. The global NFT market cap is down 5.93%. Sales volume is down 3.78%. According to CoinMarketCap, the top 5 NFT collections by sales volume are CryptoPunks, followed by Otherdeed, Bored Apes, Mutant Apes, and CloneX. Now keep in mind, some of these collections have very volatile prices, so do your own research. U.S. Federal Reserve Chair Jerome Powell was speaking at an event hosted by the French Central Bank. He was talking about regulating the DeFi industry, and he said that it needs to be done both carefully and thoughtfully. He appeared to be advocating for a degree of caution. People are concerned that policymakers might be too quick to rush into imposing regulations, especially after scandals like the Terra USD stablecoin event. He said that the DeFi winter didn't have a big effect on the banking system, but that's not the end of it. He said, quote, "The DeFi winter didn't have significant effects on the banking system and broader financial stability." He said that the central bankers might have triggered the collapse of DeFi initiatives, that when inflation really started to hit, mistakes were made. He said, quote, "The monetary policy normalization that we're seeing all over the world, all it did was reveal significant structural issues in the DeFi system and conflicts of interest. All of those things have been revealed now that the tide has gone out." He said he also shares one of Chair Gensler's philosophies, that TradFi rules should be applied to DeFi. He used the same risks, same regulation mantra. But he would also apply that to new features like decentralized governance and the use of self-custodied crypto to get around money laundering laws. Now, Mairead McGuinness of the European Commission also spoke. She called for international coordination on applying rules to crypto and DeFi. She said, quote, "Decentralized finance challenges some of the fundamental aspects of the financial system as it currently exists. The European Commission is monitoring the developments and risks in this fast-moving area very closely." But Powell also spoke on the subject of central bank digital currencies, and he said that the quiet part out loud. He brought up what I've said for a long time now. Powell said that a CBDC in the U.S. would not be anonymous. Private, but not anonymous. Quote, "It would not be anonymous. It would not be an anonymous bearer instrument." He also said that one of the key properties of a successful CBDC candidate would be having your identity verified. See, someone in the audience asked if CBDCs would enjoy the same level of anonymity that stablecoins and other real cryptocurrencies do. Powell said that a CBDC would have to be able to guarantee 4 characteristics: intermediation, privacy protection, interoperability, and identity verification. He points to the TradFi banking system, which he said finds the right balance between privacy protections and identity verification. Now, note here that he said privacy. Privacy means nobody knows what was done. Anonymity means everybody knows that somebody did something, but nobody knows who. So thinking about that, Bitcoin is anonymous. Bitcoin doesn't care who you are. It just keeps a record of what you do. Doing so doesn't require any identification from users. However, it does not have privacy. Everybody knows what was done. Nobody knows who did it. Christine Lagarde is the chief of the European Central Bank. And like Powell, she said the quiet parts out loud. Because in the past, she has called Bitcoin a highly speculative asset that has no future. But that's a cryptocurrency. And some people don't see the difference between cryptocurrency and CBDCs. Lagarde seems to be one of these people, because she said the rise of private market currencies could bring back the free banking of the 19th century. Quote, that precipitated crisis after crisis. Now here's the telling point. Here's why you can't trust the central bankers. Because she gives up the motive. She tells us exactly what it's all about. It's not about innovation. It's not about people or bringing better service. She said, quote, if we are not involved in experimenting and innovating in terms of digital central bank money, we risk losing the role of monetary anchor that we have played for many, many decades. Again, we risk losing the role of monetary anchor. That tells you everything you need to know about CDBCs. They're not there for innovation. They're not there to make your life better. CDBCs exist to help the central banks. Not you, the banks. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. Take care of yourselves, but take care of each other too. We'll see you tomorrow night.